All right, AJ, Bharat, welcome to DAO Talk. So happy to have you.
Thanks for having us.
Yep, happy to be here.
Heck yeah. So maybe to just get us started, would love to hear from each of you on your background, kind of how you got into working in the crypto space, and then what you're working on now, which teaser is going to be Arbitrum in both cases. But we'll kind of love to hear each of your journeys to get to that point.
Yep, yeah, sounds great. AJ, I'd be happy to start here. So, yeah, in terms of me, I've been working in the crypto space since 2017. Was working for like a DeFi primitive for about 2 years. That was between like San Francisco and like Shenzhen in China. So I was doing DeFi for a little bit before DeFi was like really a thing. Like to say that we were like too early, but we're not around anymore. So it was a fun time and really got like thrown in the deep end with crypto back then. And been with the Arbitrum team since the beginning of this year. I'm one of the partnerships managers, and I'm specifically focused on growing out our DAO ecosystem. So been really, really into the world of DAOs this year. Hopping in and out of Discord. Just like doing the whole thing. So it's been a great journey to get to this point.
Hey, and I'm AJ. Work at Arbitrum in strategy and partnerships as well. Been with the team for about almost 2 years now at this point. It's been an exciting journey. I probably have a pretty non-traditional way that I got here. Um, I got into Bitcoin in about 2014. I took a class when I was in law school, specifically focused as like a seminar focused on the Charlie Shrimp case, which was like a money laundering, charge in connection with Silk Road, as well as questions around sort of the bit license, which still haunts New York residents to this day, and their ability to interact with centralized exchange initiatives. Um, Fast forward till I finished law school, I was working as a real estate lawyer, but had an extreme passion for this space. Had a close relationship with the Off-Chain Labs team, who was building Arbitrum at the time. Was their lawyer before the company was founded, and then um, once it launched on testnet, and there was something sort of to do from a non-technical perspective in October 2020. Stephen, one of the founders, called me and said, "Would you want to join?" And I just basically quit my job and jumped right in. So it's been a weird journey, but fun.
Hell yeah. Love both of those journeys. Big fan of Arbitrum as well. So just some context for the audience. Tally has just launched support for DAOs on Arbitrum. And I know there's a ton of really interesting stuff happening in the space there as far as like DAOs launching and growing. So we're really excited to get to know the ecosystem a little better on the Tally side. We're definitely going to jump into DAOs and governance and everything like that, but would love to stay slightly higher level for a second, just on Arbitrum. I think a lot of people have started, using Arbitrum, using other layer twos. But it's still kind of, I think, newer to a lot of people in the space. So would love to hear your take. Maybe we'll start with you, AJ, on like what Arbitrum is and why it's a really exciting and valuable project for the ecosystem.
Yeah, for sure. So Arbitrum, most people know is, or maybe not, but is an optimistic rollup technology. And that's a fancy way of saying that it's striving to scale Ethereum without compromising on its security. At a high level, and a very high level, because I'm not a technical person or an engineer, the way it works is basically you execute your transactions on Arbitrum, and those the call data of those transactions are posted to the Ethereum blockchain, and Ethereum accepts that data and secures that call data, and then basically the question now becomes, how do we know that that data that Ethereum holds that was posted there is true, correct, and complete? And this is where the secret sauce of rollups is, right? So optimistic rollups and ZK rollups are both fundamentally dealing with the question of how do we know that the data that was posted to Ethereum by the rollup is true, correct, and complete? And what's opened in the optimistic case is a fraud-proof window, where basically anybody who's running a validator can say what that person posted was actually not true. It's something, this is the correct state, and it's deterministic based on previous assertions of what that correct state or who is right in that disagreement, and that is sort of how we achieve consensus. In reality, as long as the system's working well, nobody should be challenging. From a crypto economic perspective, it doesn't make sense. You're going to get slashed if you're wrong, and it's pretty clear to understand, what the correct state is based on all the previous, assertions that were made. But Arbitrum's roots go way back. So Ed, our chief scientist, he really began designing Arbitrum in 2014, before Ethereum was even founded. Once the concept of a smart contract blockchain existed, Ed's thesis was this was not going to be able to scale as one blockchain if you wanted to remain decentralized. What you need is an execution layer separate from a data availability layer. And if you look on YouTube, you search for Arbitrum, the earliest finding of it is a seminar that he gave in his class at Princeton in 2014, where he was really focused on this. What happened was, it kind of got pushed to the side for a bit. Ed went to the White House. He was Obama's deputy CTO. And then when he came back in 2018, when Trump became the president, the other two co-founders, Harry and Stephen, came into his office. And this was right after the CryptoKitties congestion in the last bull run that we had, and said, we really have to pick up on this scaling thing. And that's sort of how Arbitrum got off the ground. So it's been years and years in the making, designing this protocol. And it's really cool to see the progress. We've been live on Ethereum mainnet for a little less than a year now. There's been hundreds of applications that have deployed, billions of dollars in liquidity has moved over. And it's really unlocked a lot of creative new primitives, particularly on the DeFi side with derivatives and perps, really getting product market fit in a way that they couldn't on Ethereum, just because gas fees are way too high for the computationally intensive stuff that they do. And it's really cool to see, how quickly the ecosystem's organically been growing, and as well as the community really forming around it.
Super exciting. Would love to add, any takes there, Bharat. I think you're newer to the team, but would love to hear your take on Arbitrum. Were you a user, before you joined the team? And what do you find exciting about Arbitrum as a product in an ecosystem?
Yeah, for sure. So I think just kind of going back to my previous experience, working in DeFi back in between 2017 and 2019. Back then, there were just literally zero users. I think everything was just kind of fun experiments in a sandbox. But I think it's really, really cool to see Arbitrum be in a place where it's attracting real users, and people are really enjoying using the protocol, being able to use DeFi in a way that they couldn't do on Ethereum. Kind of like AJ said, I think one really unique thing about Arbitrum is the fact that it's had extremely organic growth. They're the users are very sticky. They have bridged over from Ethereum and have really just stayed there. We don't see a lot of people jumping from Arbitrum to another chain. They end up just really they like staying on Arbitrum. Like I said, it's organic, so it's cool to see actual users use actual products. So it's kind of inspiring to see.
Absolutely. Arbitrum was my first real scaling experience as a user. I kind of skipped a lot of the alt layer ones and side chains and stuff. I'm a bit of a usually closeted Ethereum maxi, sometimes loud. I just like security basically. And so Arbitrum was my first chain that I really used, that was designed for scale. Totally agree. Great vibes over there. It's very fun to watch transactions confirm quickly. It's just I don't know. It feels fresh, and a new frontier. So I want to get into DAOs, but I want to ask one more question about Arbitrum. So I know there's sort of this really fast pace of development in the layer 2 space in general, and definitely in Arbitrum. So would love to hear I think you launched about a year ago, or maybe coming up on the anniversary. I think I saw this on Twitter. Would love to hear how things have changed from a product perspective and an ecosystem perspective over the last year, and kind of what you have coming up as well. Maybe starting with you, AJ.
Yeah, sure. So there have been two really big developments, I would say, that have occurred since we launched. The first is one piece of feedback that we got, and this is not a long-term problem, there's a short-term problem, is that rollups are still too expensive for certain use cases. And what I mean by that is, if you want to do social on-chain, or if you want to do gaming on-chain, even if your call data cost and a typical Arbitrum, let's say swap transaction right now is about 15 to 20 cents, for certain use cases, that's still too expensive. If you want to abstract transaction fees completely from the user, you need in the 1 to 2 cent range that you can see on alternative layer ones that exist today. And we were responsive to that. So, obviously Ethereum has its roadmap with the IP4844. There's great work being done there, as well as the ETH2 sharding roadmap, which will make data availability much cheaper on Ethereum. But in order to solve it today, we wanted to build a better solution. So we actually are launching very soon, I can't leak all the alpha, but very, very soon, a new chain called Arbitrum Nova. And this chain is designed for those social and gaming verticals. And the way it works, again, at a very high level, is that instead of posting all of the call data to Ethereum, it utilizes a data availability committee. The majority of the costs of using Arbitrum today are pass-throughs to pay the Ethereum miners and, after POS, the Ethereum validators. But if you take that cost away, that's the fundamental difference between, let's say, a typical sidechain and a rollup. You can have properties that are somewhere in between, and that's how we like to view the Nova chain. And the way to think about it is it acts almost like a sidechain, utilizing a data availability committee. But what happens is if any validator, sort of wants to trigger the challenge or change the protocol, they have the ability to push the protocol into rollup mode. So you don't have some of the risks in a typical sidechain model where if 2/3 of the validators are colluding, they have the ability to halt progress on the chain, or you need an honest majority assumption. None of that works. None of that is required because any single validator has the ability to push it into rollup mode. And that's why we call it Arbitrum AnyTrust technology. As long as you can trust one of the validators, you can have the confirmation that the chain has the ability to fall back into rollup mode, and that will bring down costs significantly. Our vision of this is, sort of these two products can live side by side. We want DeFi and high value NFTs to remain on the rollup. We think it's important to have that level of security, but it's not one size fits all, unfortunately, from a trade-off between security and cost. So that's the high level on the technology side. Ecosystem side. I think what's interesting, and there's been an evolving theme, if you go back to sort of the original business development efforts for Arbitrum, it was like, we need this protocol, or where's Uniswap going to go, or where's Aave going to go? And what really happened was that many of these blue chip DeFi protocols really went from being applications to being protocols. And it's almost like public infrastructure. It doesn't make sense for them not to be on every chain. It doesn't make sense for them not to be something that other people can tap into. And the notion of community has been abstracted one layer higher. And now the community is really about DAOs. It's about niche projects. It's about NFT projects. And it's seeing how all of these things tap into not just roll-ups of public infrastructure, but probably core DeFi primitives and maybe NFT marketplaces. We'll see, a similar evolution as well. So I think that's been a pretty significant change that we've seen sort of from an ecosystem growth perspective.
Awesome. Yeah, that's probably a great launching off point too. Would love to hear a little bit more about what you're seeing on the DAO side of things on Arbitrum. I'm sure, there's a bunch of projects, big and small, different communities. There's probably different stages of decentralization. You probably have some, protocols and applications where it's just like a small core team still building, and others where they've really like gotten the community involved in governance. So would love maybe a high level view of like what you're seeing in terms of DAO adoption, like number of DAOs, kind of, that side of things on Arbitrum, and then we can maybe even dig into some specific examples. Maybe I'll start with you, Bharat.
Yeah, sounds great. So yeah, it's been really, really cool to see like what DAOs are doing on Arbitrum for a few reasons. I think, like you mentioned before, that like people who are on Arbitrum value security at a very high level. It's kind of like this like ethos of Ethereum, where you're like, you like love Ethereum, you love the security that's like built, and like you're on Arbitrum because you want to be able to use Ethereum in a cheap fashion, but like with that shared security of Ethereum. So a lot of DAOs like have that in mind, where they're like, okay, we want to like maintain this vision of Ethereum and maintain this vision of being on chain and like committing data to Ethereum. So it's really cool to see that like DAOs on Arbitrum are really thinking about stuff like on-chain voting, where like I think the majority of DAOs right now are doing things off-chain and are essentially doing a lot of their operations, like on Discord, and maybe just doing like a quick like pulse check vote off chain. But like DAOs on Arbitrum are really thinking about stuff like on chain voting, potentially even like treasury management as well. Arbitrum, like AJ mentioned, is like the number one roll up by like TVL. So you can manage your entire DAO on Arbitrum. You can use like treasury management solutions, whether it's just like Curve or Sushi or things like that, like regular DeFi, or a little bit even more exotic stuff like GMX or DobeX or something. But yeah, like pretty much people are using like a lot of cool on-chain products, and I think I'm very interested to see like how on-chain voting takes off, and it's like something that's really possible on like a cheap layer 2 like Arbitrum.
Yeah, absolutely. I think layer 2s really open up the design space for on-chain governance. There's kind of the first part of this, which is just like, oh, now you can vote for cheaper. Maybe that will have like a first order effect of increasing participation. But it's actually, in my mind, like that's exciting. But what's even more exciting is like maybe there could be different voting designs. So one of the things that you see today in a lot of DAOs on Ethereum is a lot of the actual governance work is done prior to the proposal being put on chain. So it'll be like, a core team's like developing the proposal. There's a lot of like off chain work. Maybe there's some social signaling, some discourse, and then finally like the on chain part happens when it's kind of like fully scoped, fully delivered, and then it's a community yes, no, kind of like a chance to opt out, basically. And again, that's awesome. But I think there's a lot more we can do with governance in terms of like getting the community actually closely involved in what is even on the roadmap in the first place. And I think that like having layer twos with like, cheap and eventually like extremely cheap / like borderline free type transactions will really enable much more creative on-chain governance designs, which today all happen just like in a Discord or like on a platform like Snapshot, which is, fully off chain. So anyway, super stoked for that. And like, yeah, I think it's funny, like we started off supporting a couple of alt layer ones, and what I'll say is like the Ethereum aligned one that we supported is like much more likely to actually have DAOs on it, and I think that absolutely carries over. Like that ethos and like desire to decentralize is very much like comes from the Ethereum community, and so yeah, very very excited to see what people do with on-chain governance on Arbitrum. Anything you wanted to add to that discussion, AJ?
No, I think that was great. I think one thing I'll do is, almost plug it, right? So this is one of the things that can't be done top down from like business development or partnerships effort from, a roll-up project like Arbitrum, right? There needs to be, community buy-in. And there's real questions here about like inclusivity, right? So like, if you're trying to actually attract, normies who don't really understand why anything costs what it does on Ethereum, like the barrier of entry is so much higher if you're doing things on Ethereum directly. And so what we've seen is that some projects are looking to move. They want to have voting on chain in like an alternative layer 1 or a side chain that's EVM compatible and keep their treasury on Ethereum layer 1. And it's very much a band-aid approach, in my opinion. Having these things not tightly synced, and they don't want to take their treasuries obviously into side chains. Having these things not tightly synced is not ideal, but also they're setting themselves up to keep everything on layer 1. And if we fast forward and think about Ethereum's roll-up centric roadmap, if we fast forward 10 years and there's anywhere near the sort of user facing interactions happening on L1 that there is today, like it will be a failure, right? Like the world of which users interacting with L1 should be like this as familiar and as similar to you interacting with like sending a wire at the bank instead of using Venmo and PayPal, right? Like it should be reserved for things that are of extreme significance at the most, and there'll be multiple. We already obviously see multiple, but there will continue to be more and more, roll-up environments on L2 that will probably, fragment into different niches that are appropriate for specific, communities and ecosystems. But that should be the user's onboarding point. And like for example, we made a big push with centralized exchanges to get support, into Arbitrum. And that was super easy with ETH. It was easy with Arbitrum native projects. And I think that's actually been one of the big growth components for some of these Arbitrum native projects is being able to adapt and add users directly into the ecosystem. But it's very difficult for me to say, exchange list token X, directly into Arbitrum so that users can onboard there if the vibes of the ecosystem, the community are not pushing for that to happen. And I think that's where we need a community call to action for like, how do we think about what a migration looks like? And there is risk, and understanding sort of how do you mitigate risk? Like if you choose an L2 and that's not the right L2, like how do you move? And thinking through, designs for, not being, I think that's one of the reasons why it's been so slow, is people are like, what, the roll-up wars, as they call it, are just starting. Like maybe I chose the wrong one. And I think that's the wrong mindset, right? People, you can move assets. It's really about it's the social layer that we're talking about, and a lot can be done. But staying on layer 1 and like using Snapshot or taking your voting elsewhere, I don't think is a viable long-term solution.
Absolutely. all of that resonates really strongly with me. I think, yeah, if you want to build a community of folks who are maybe like different to the meme of the 10,000 DeFi power users or whatever on Ethereum, like really centering your project on a layer two like Arbitrum, I think makes a lot of sense. I'm curious, like you know, it's okay if you don't like want to get into like deep into specific examples, but if you can, would love to hear a little bit about, you know, any particular communities that you think are doing a good job with governance, or like doing a good job with decentralization, or just like building that really strong kind of native community on Arbitrum today.
Yeah, AJ, I'd be happy to jump in here. I think like an example that I like to think about is Treasure DAO. So Treasure DAO is like the largest NFT marketplace and ecosystem on Arbitrum right now, and they are one of the projects that has really like pioneered this strategy of like free NFT mints. And because like fees are so cheap for Arbitrum users, they ended up like bootstrapping a community with these free NFTs that have gone for like you know tens of thousands of dollars on secondary markets. And like just because of like the strength of the community, right, there was no like artificial hype, there was no like paid mint and things like that. It was all organic and completely free, and like from there really like got the community excited about participating in like governance and things like that, just to like potentially get on like a future whitelist for another free mint. So like I would almost say like the price of like their secondary NFTs are like literally just like the strength of the community. Like, and I think Treasure is a lot of people's first interaction with the Arbitrum ecosystem, which is really cool. That's like through their NFT marketplace or their governance, or just like they've really built this entire suite of applications on Arbitrum that have like made like getting involved with Arbitrum like way more like user friendly for people who are maybe like scared of DeFi. And they've also done like a very, very good job with their governance. Like their forums are like very organized and like very inclusive as well. And I know like there's some other specific examples that I can't really get into right now, but like products that are like on the path to decentralization, who are, like I said, thinking about things like on-chain voting, enforcing things like on-chain. And like I think there are some really cool like design principles, like you mentioned, like whether it's like giving NFTs to people who are voting on proposals that you can't really do on main chain Ethereum. There's cool stuff you can do, like boosted voting. If you've like participated in voting in the past, your next vote will be boosted. And it kind of like equalizes a little bit because it incentivizes participation more than just like financial power. I think like in the last few months, we've seen a lot of examples of like people with like a ton of financial power just swinging votes in one direction. And I think like boosted voting is a really great example of just like incentivized participation. So like you mentioned, there's some really cool design things that people are thinking about in the Arbitrum space. Things that maybe people on main chain Ethereum aren't really thinking about.
Boosted voting. I love it. I've actually never heard that phrase before, but it makes a lot of sense. Like, so on a high level is the idea there that, based on someone's like, Web3 profile or like past activity or something, they could receive sort of like a temporary boost in voting power that may not be like directly driven by, for example, how many tokens they have.
Yeah, that's exactly right. And it really just incentivizes voting and like as many proposals as possible. Because I think at a certain point, DAOs struggle with like retention, and maybe like 10 to 20% of all like token holders end up voting. And maybe that can happen for a couple reasons. One, maybe people just don't care, which is fine. The second one, maybe that people feel maybe discouraged because maybe they'll only hold like a very small amount of tokens relative to like larger whales. So they're just like, oh, what's the point? But if you can like end up getting incentivized for being like, hey, you were participating in like maybe these like lower level votes, but like it shows that you care a lot about the protocol and governance. I think that boosted voting really can incentivize like greater participation.
Yeah, it sounds like it introduces an element of gamification as well, which I like a lot. I actually think like governance should be fun, right? It shouldn't just be like yes, no, like approving these super technical proposals. Like there's definitely room for that, but also like especially in a community like Treasure DAO, there should be an opportunity for people to like get creative with, helping sort of co-create the game or co-create the community. There's a lot of room for that to be like a fun time, not just like, yes, no, should we change this risk parameter, kind of thing.
Yeah, and I think one thing that's interesting is that like it's really interesting to see how quickly a community can grow on layer 2, right? Like Treasure DAO, like they grew so fast, and like they're a really passionate community. And a function of that is, and we've spoken to them about some of the stats, and like, who you're attracting when you do like things like free mints. And it is much more inclusive than things, because even if you do a free mint on Ethereum, you're pricing out so many people, in developed countries from even thinking, just because of the transaction fees. And it's really interesting to see how sort of inclusivity plays a role in this. And for some people, like, this is their first exposure to crypto, and sometimes for those people, like, crypto's in many ways like one of the most important technologies that's existed in their lifetimes, right? And this is probably me going back to like sort of how I got into this and passionate about it. Like, we haven't felt the need, I think all three of us live in the States, like, so much for like the notion of like, censorship resistant to sovereign money, because, we tend to have more freedom than most places in the world. But for some people, like, that's a really important, thing. And, it's important for everybody. For some people, it's, more relevant on a day-to-day basis. And if they get that exposure because they've been exposed to a really cool community and they understand, like, that's their learning point, I think that's a massive success for everybody. Because I think we're all still so early. Like, if you look at like just people who are interacting on chain, and I don't mean like owning crypto like in Coinbase, because like that's, let's call it like Web 2.5, but people who are doing proper on-chain custody of their own assets, it's extremely early still. And we're all, together, like this podcast and, every interaction that we have, it's just about education more than anything else. So, it's a great tool for seeing people. How do you participate in governance? What does it mean to participate in governance? What does it mean for a community to have a treasury? I think one thing that is very sophisticated in sort of the traditional financial world, which projects in the crypto space don't think about enough. And, I think some projects were really hurt by this in the last few months in the bear market, is treasury management, right? Like, there's departments dedicated to treasury management, risk hedging. And I think, partially because of gas costs, partially because of like the lack of, structured voting processes, people were leaving tokens in their native, people were leaving their treasuries in their native tokens that have a much higher sort of beta and volatility to the market. And if you don't have runway, you can't deal sometimes with a 95, 98% drawdown, to your token. It just destroys your budget, and it can have permanent effects on the project. So I think a lot of these things are enabled by sort of coordination, cohesion, and creativity, and that's what inclusive environments can really help grow.
Man, yeah, that all resonates really strongly with me. One of the things that I feel strongly about is the idea that Web3 onboarding or crypto onboarding, it's almost a very manual process. Actually, this is one of the reasons I really like DAOs and am bullish on them. Is a lot of the folks we talk to, it's like they're bringing people into their DAO, and it's the first time they get a Web3 wallet. And then the first thing that they do is they try to help the DAO in some way, versus buy like a Moonboy token, right? Like, there may be a financial element, but like the core of the interaction that they're about to have is like, I care about X thing. This is what the DAO is working on. And now I have the token, so I can join the DAO. And now I'm going to like, do some work or something. And that, like, nothing against trading. Like, trading's an awesome application too. But like, I think it's limited to a certain sort of set of people who like can or have an interest in. And we've seen a lot of cases where like that type of onboarding is actually very painful, right? Because sort of like the newbie, they just get fleeced, and then that's like step one of their onboarding. So I think DAOs like actually represent a really bullish way for people to onboard to Web3, where they can like find a community that they identify with, that like they think is doing something positive, and then like actually contribute a little bit and kind of get into the space that way. Maybe even earn a little money, for their work, versus like gambling on the right token. And just building on that with regard to Arbitrum in particular, like in the inclusivity, I think that's essential as well, right? Like, I think in the last bull market, we saw basically Ethereum become totally inaccessible, right? Like, just don't bridge your funds there if you're a newbie, unless you're just like incredibly wealthy. Like, you just can't, just don't do it. But then we saw a lot of these other chains like Rug, or like the application, there wasn't a culture of security, right, on the application or in the bridges where you got your funds over to those chains, right? So I think something like Arbitrum represents a really happy middle where it's like possible for people to participate, but there's still this like culture of security and long-term thinking. So anyway, just like a little riff on onboarding. Like I think it's really manual. It's more manual than people think it is. Like they think like you need some miracle of like, oh, now there's like walk to earn and everyone has crypto or something, right? It's like really it's just like step by step, layer 2 by layer 2, DAO by DAO. Like we bring people in and give them like an actual good experience. That's kind of like what success looks like.
Well, yeah, I completely agree that. Yeah, it's true. Like move to earn. Whatever your thoughts on it from like a tokenomics perspective is, it definitely gets people excited. We have something similar. We've been most of this is public. We've been collaborating and working with Reddit now for almost 2 years about how to bring their communities on chain. They've been live on test now with 2 communities, and they'll have some more information about their mainnet plans hopefully soon. But yeah, that's really like, Reddit's looking to, give the communities control and ownership in the Reddit's, the subreddits. And like, that's super cool. That's the next level, instead of having everything live in the Reddit database in terms of your contributions, you can have it in a way that you can own custody. And I think that's going to be a really cool, use case for, ushering in this notion of, self-sovereignty and ownership of your contributions to an ecosystem and a community.
Yeah, I just wanted to go back to your point about onboarding, which I thought was like a really interesting way to put it. I think like a lot of the onboarding into crypto has been very like FOMO driven, and usually it's like some person like aping into a token they like don't really know much about, but they're like hoping to get some sort of like financial upside for it. Usually this turns out like really bad for them, and like they end up getting like rugged on something, and either like the majority of them will leave, or some of them will stay and end up getting interested in crypto after that, right? Almost kind of like Stockholm syndrome. Like, okay, I've it's like a song. I lost all my money. May as well learn about this, and then they end up getting really interested. But I think DAOs really open up this opportunity to get interested in something first, and then you're like, oh yeah, like I'm also like operating in like crypto in the background. Like that's also a cool element to this. But like it's way stickier the fact that like it's interest driven instead of like FOMO driven. So I think it's like a really really great way to put it.
Well, that was such a great conversation about Arbitrum, about maybe some of the possibilities that we see for DAOs in this unique layer 2 environment. Would love to transition to just some quick closing questions. First one, I need rapid fire responses from both of you, so be ready. The first question is 2-part. So what's your favorite part about working in crypto, working on Arbitrum, working in layer 2? And then what's something like maybe that you don't like as much or that you think we need to work on as a community to make it a more friendly space to work?
Cool. AJ, I can start these rapid fire questions first. So to answer the question, I think my favorite part of working in crypto is the fact that it's very passion driven right now on the inside. I think we are still very early. I know that's a meme, but like the people who are working here really, really want to be here and are almost like desperate to carve out a legacy for themselves or contribute some sort of block, like building block in this industry. So like that's really exciting to be around that energy. And that kind of leads me to my next point in terms of like it's very cyclical, right? So like when things are down 95%, a lot of people that you thought were going to be around just end up leaving or like rugging or like like there's not a lot of staying power here. So like it's interesting seeing cycle over cycle who sticks around. There really ends up being like a camaraderie from it. So like on one side it's kind of a bummer, like that's the part that I don't love, where it's very cyclical and actors come and go, but it really ends up narrowing the field and seeing, wow, people are really here, are interested in this, and you kind of see who earns their stripes through these cycles. So I end up liking that part of it even more.
My favorite thing is I always feel like I'm learning in this space, and it's like if I'm talking to like a DeFi project, like these guys are probably like PhDs in like, I don't know, financial economics or something. And if you're talking to like an engineer, it's like they're breaking like cryptographic breakthroughs. You're talking to an NFT artist, it's like this guy's setting trends, and it's so cool to see like people come from different walks of life and sort of, I would say, like coalesce and gather around like this notion of like the importance of self sovereignty and permissionless behavior. And like everyone has a different background. Everyone has a crazy story for how they got into the space, and it's so cool because you can always have everything is a learning moment. In in an area that you're probably less knowledgeable in. My least favorite thing is I kind of wish that there was a way to solve this problem of how do we, you know, make sure that as we scale projects, they actually have product market fit while also being able to decentralize governance. Because what ends up happening oftentimes is projects mature prematurely because you want to decentralize, and that slows things down a lot from like a building perspective and an expectation of delivery perspective. Like, what typically ends up happening in crypto almost is you have like companies and projects like doing IPOs like way before product market fit, and whether or not it's in the name of decentralization or it's the name of get rich quick, it doesn't really matter. That's not like my primary focus. My primary focus is that it becomes very hard to build an amazing product when you have to answer, and you don't have the ability to move as quickly. And it's a tough because there's no right answer to that question, but that's something that I'm always like struggling and grappling with, of like, how do you balance these two extremely important trade-offs and factors when making decisions about how to sort of grow your ecosystem and community?
Great answers. Just to touch briefly on your last point there, AJ, I totally agree. Like, there's almost this perverse incentive sometimes when it comes to like the early liquidity, right? Where it's like you're trying to do something hard that takes a long time to build, but maybe you have this opportunity to somehow get liquidity in like 6 months. It's definitely not like an ideal incentive structure. One of the things that we're seeing, we're starting to see in the space is projects that they start to sort of like decentralize as they go. So some projects we've been like talking with Seed Club and Mirror, they both like they have a token, but it's not transferable yet. And they sort of like start giving it to their partners, their users, their ecosystem participants, like slowly over time. And I think that represents like a really interesting model where you can sort of like start to decentralize. And then those people are like involved in the project, but not in like some kind of liquid, like on-chain governance-y way. So that's just a side note, but like that's one thing I'm starting to see emerge that makes maybe a little more sense than like, I built a DeFi protocol, now you can buy my DeFi protocol token like 6 months after founding. Absolutely. Cool. All right, last question for both of you. What is your favorite place in the world and why?
Favorite place in the world? It's a good question. I think it would probably have to be Paris. We just spent a few weeks there for ETC, and I mean, Paris is beautiful for a lot of reasons. One is I think it's so walkable. It's like very like diverse and like cosmopolitan as well. I think it's like very safe as well, which I really enjoy. Like I'm from Los Angeles, and Los Angeles is like my favorite city to live in the world. Like I really do love it, but I think like the food culture of Paris, and I think like honestly just seeing like how much energy and like crypto specific, how much energy there is around crypto in Paris is like very, very interesting. It wasn't really a place that was like top of mind for me even like last year, but I saw a ton of energy around it, and like ETC was like very inspiring to go to. And yeah, it's just a beautiful place to be. So I love Paris.
It's a good one. I think I would say I once went on a safari when I was in college with two friends in South Africa, and that was like the most amazing month. It was like I completely felt detached from the stress of like normal life and really connected with the world that we live in and felt like a part of nature, like in a way that I probably don't ever feel. I don't know if favorite's the right word, but definitely the most eye-opening and sort of thought-provoking.
Amazing, great answers. Bharat with the crypto tie-in, and then AJ, sometimes like when you work in crypto, it's so crazy, it's so refreshing to like just completely unplug, go do something super different. So really appreciate both of your times. I know I learned a lot about Arbitrum. Super excited to work with you all to maybe meet some of the folks that are building DAOs in the space. Would love to have some interesting DAO builders on DAO Talk who are actually like creating stuff on Arbitrum. So more to come there. But in the meantime, thanks so much for being here. It was great.